But let's get a conversation going on all these global cues and how they impact India. Arvind Sanger, managing partner at Geosphere Capital Management, is with us on the show this morning. Arvind, thank you so much for staying up and taking this call. Always great having you on the show. So, okay, let's get the banks discussion out of the way because we have all this news coming in with this Moody's downgrade, and they've placed a couple of the other lenders on a ratings watch. The markets seem to kind of digest this yesterday and take it in its stride. Equities also recovered a bit. Bonds didn't do too much. But do you think the reaction's over and done? It was a one-day event, or could this now continue to become a bit of a lingering reason why maybe people take some money off the table?
Well, the last time the rating agencies were early was never. So the idea that the rating agencies are going to teach the equity market something that they don't already know, or that macro investors already don't know, is laughable, right? So the reality is that people have been talking about this, crisis in commercial real estate for several quarters now, and we know that occupancy has fallen a lot. And cities like San Francisco and New York, there have been multiple bankruptcies, and there is exposure to that. So look, this is a problem. This is a well-known problem. I don't think that the rating agencies are early to the party. The market, I'm not saying will not see some hit from this in the coming months and quarters, but I don't think there was anything new today that we haven't talked about before.
So you're not seeing a big fallout of this Moody's downgrade. Arvind, morning, Reema here. What about the China data? One, the trade data slumping, and two, China's CPI pointing to disinflation. How would you read this, and what would be the ramifications for emerging markets in terms of flows, economy, etc.?
Well, China has been actually the biggest negative surprise of 2022. I'm sorry, for 23. 22, it was a negative surprise, but in 23, what's surprising is that, you would have expected with the removal of zero COVID, there would be the normal recovery that we saw in every other post-COVID economy. But what we are finding is that China has structural problems, demographics, bursting of the housing bubble, business confidence, unemployment levels at the youth level, which is extremely high as 40%. And you have an export, slowdown from Western consumers. Plus, you have the structural headwinds of companies looking for, removing dependence on China or reducing dependence on China with the China Plus One strategy. So there are many, many headwinds China has. And it's clear that the policymakers don't have any magic wand. They can't reverse demographics. And the business confidence they've been unable to do, partly because they've cracked down so many private industries that President Xi, under his leadership, they've cracked down on. So I think that China's problems are becoming, harder to solve. I do expect, and we all expect, that China is going to throw some money at the problem. But I think they don't want to create a bigger debt bubble than they have. There by some estimates, 220 to 250% of GDP is debt. So I think those problems are not going away. So I think that China is going to be a unique headwind for growth. But I think China's loss is India's opportunity. At the end of the day, I don't think India or emerging markets get hurt just because China has its own unique problems. I think people are looking for other emerging markets which will have growth, and other markets. It doesn't matter emerging or developed. And India is one of the ones that is, I think, not as much impacted by China. India has its own short-term challenges, but I think the structural problems are clearly unique to China.
Hi, Arvind. Good morning, Arvind. So how do you approach the Indian markets then? Clearly the longer-term story looks good. In the near term, this crude oil spike, maybe valuations, could make investors a little bit jittery. But what are the themes you're bullish on in India?
Yeah, I think, look, India has been a, story that's been favored by emerging markets investors, us included, for the last couple of years. Evaluations, this is always a challenge, right? If everybody gets bullish on something, things get expensive, then it takes a little while to digest it before earnings. Look, the quarterly earnings were good. We're finding, bottom up, a lot of interesting ideas, whether it is in, housing or housing-related material suppliers, or whether it is in, things like travel-related industries, or it's in other special situations, anything related to recycling, green economy. There are many things that we're finding that are interesting, that are niche, that are not making a big global macro call. But I think, domestic capex is an area that we continue to be bullish about. We have selective exposure there, but we think that's coming. I think that cycle is coming. The PLI scheme, is a positive, but I'll tell you a negative. I'm a little concerned that India doesn't turn the PLI scheme into a protectionist license Raj. And this, sudden banning of imports of computers, of PCs, was the kind of thing that I think is a negative, kind of an approach versus a more positive approach of creating the framework for companies to come to India and invest because the market makes sense. And therefore, I think India needs to be careful. Those kind of actions, I think global investors and domestic investors don't see as a sign of strength, but as a sign of somewhat regressive economic action. So I think there's a lot going for it. It's just up to India not to do things that might seem short-term to be great, but would have long-term structural negative implications.
Interesting point. Okay, we'll keep that in mind. Of course, the rationale being cited here is that some security angle to its security concerns. And then, of course, the larger Make in India game plan. We could do that with mobile phones. Let's see now what happens with laptops. But your point is taken on board. Arvind, great speaking with you. Thank you very much for joining in, and we look forward to the next Connect. Quick break on that note. We'll come back with our list of top stocks to watch on the other side.